capital gains now with an exclamation mark. The reason I do these lives is because I want to teach as many people as possible about the Spendthrift Trust, because so few people have ever heard of this, and I want to teach it to as many people as possible. This trust is legal, it's patented in the IRS Tax Code 643B, like Bravo, and it's going to save you federal taxes. Keep your information private. Your LLC, S Corp, or C Corp is statutory law, and it does not do that. Anyone can do a Freedom of Information Act to get that. And it's going to keep you from paying any judgments if you get sued. I can't stop you from being sued, but you won't pay any judgments if you do get sued. The reason behind this is they can only sue the individual. They can't sue the trust. And the old adage from Nelson Rockefeller, own nothing but control everything. Everything's in the trust. But they only can sue you, and you're worth nothing. Right now, I have a whopping $1.50 to my name in my wallet because I just did another presentation. Now, 97% of the trusts sold every year in the United States are what's called a family trust that are only designed to avoid going through probate when someone dies and then they dissolve. That's it. I did have talked to somebody who has a trust that deals with a life insurance policy. But once all the money from the life insurance policy is used up, that goes away. What makes this trust so very, very, very special is because it makes there's a non-grantor who signs up for the trust and then signs away from the trust. So let me tell you this. The full name for the trust is irrevocable, generation to generation. Complex, it can hold money from month to month, year to year, decade to decade, century to century. Discretionary, the trustees can make the rules for the beneficiaries. Non-grantor, this makes the trust 100% private. The person who's a non-grantor, you're going to need their social security number. They sign up and sign away from the trust, so it doesn't come back to you. And then the Spendthrift Trust. This has been in front of the U.S. Supreme Court twice. Both times the Supreme Court has honored in favor of the Spendthrift Trust. This is as legal can be. Now, with the business trust, there's 4 different trusts we're going to talk about today. So first off is going to be the business trust. So the business trust is for 1099 income earners. I don't care if you're a real estate agent, if you're a real estate broker, if you're an affiliate marketer, if you have a pizzeria or doing anything else, you're going to save at least 70% on your federal taxes. I can say that legally. So my first example, my little piece of paper here, is a real estate agent here in the North Carolina, in the Charlotte area. She's divorced, so she's filing singly, and this is her 2022 numbers. So last year she made about $70,000 in 1099 income, and when you do all the math and everything else, and then when I times it by 70%, I tell her I'm going to save her at least $7,495 on her federal taxes. Year after year after year, generation after generation after generation. Now, this other piece of paper I have here, it's husband and wife. They're both coaches. They have not finished their 2022 taxes yet. So it's 2021 taxes dealing with 2023 income and everything. So they're married. They filed jointly, and they're at 24% tax rate. Just to let you know, there are 7 different tax rates from 10% to 37%. And there's 4 different ways to file your taxes. So we have to have some information from you. Do you file single? Do you file jointly but separately? Do you file jointly or things like that? So they file jointly. They make $200,000 a year. At 70%, we're going to save them $24,360 at least. My clients are saving between, I can say legally 70%, at least 70%, but most of my clients are up in the 90 to 92 percentile saving in federal taxes. That's the business trust. Beautiful thing. Save federal taxes legally. Keep your information private and don't pay any judgments if you get sued. Now with the beneficial trust, this is for anybody who is an investor. I don't care if you are a passive investor, a real estate investor, crypto miner, if you're doing the stock market, if you've got dividends, if you've got short-term rental, Airbnb, Verbo, got long-term rental, maybe 10 doors, 20 doors, multifamily. If you've got royalties, if you are NFT world, you're an artist, you're an actor who's hopefully not on strike, but this is going to be for everybody. Also selling this trust and NFT world is in royalties. Now, This trust, the full title I told you is Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. This applies to all four trusts. There's the business trust for 1099 income earners, the beneficial trust for investors, the trust for people who are over 65, and the charitable trust. I want you all to know all those informations. Now, this comes from the IRS. I want to read this to you. Almost everything you own and use for personal and I'm going to move this because I want to make sure. Almost everything you own and use for personal purposes, pleasure, or investment is a capital asset. That's a huge, broad topic. So just to give you an idea how I found out about this trust, back in July of 2020, I took down the deal of the week. It was a bank-owned reverse mortgage for a house in Rocky Mount, North Carolina. It's in Nash County, about an hour east of Raleigh. The woman had passed away. It was a 4-bedroom, 1-bath house. I paid $20,000 for the contract. It was going to go to auction for $50,000. Yay, Sally. I'm going to make a $30,000 spread in between, but it was the middle of COVID. It took 13 months. So I got curious. In my real estate group, their national real estate group, Garrett Gunderson wrote a book called What the Rockefellers Do. It's now called What the Billionaires Do. But the Rockefellers have this trust. They call it the office. It's 7 generations old. It's got almost 400 people using the same EIN, that's employee identification number. They all have their own bank accounts, their own silos. And if the Rockefellers can do this, why can't I do this? So I started up, I became a client, and then I became certified to work on behalf of the law firm. So I teach this in my real estate group, and I started my own company. So I had to wait 13 months. So August 28th, 2021, my little house, I paid $20,000 for. I did 2 simple bill of sales. One bill of sales said I'm going from my LLC for the Rocky Mount house to myself, Sally Marie Gimmon. And then second bill of sale says I'm selling Rocky Mount, North Carolina from Sally Marie Gimmon to the trust. I went to the bank, got them notarized, scanned them, sent them to the attorney in Raleigh. Next day, the attorney in Raleigh asked me for the first page of my trust. And so when it finally did go to auction, I paid $20,000 for it. It went up to $64,000. Woohoo! I made $44,000. But even better, that spread in between, I'm at 24%. I saved over $10,550 on that first real estate deal. So the beneficial trust is going to save investors short-term capital gains. That was short-term capital gains. Long-term capital gains, interest income. If you are a passive investor, maybe you're in a REIT, or if you're a forex investor, you get taxed twice, interest income and capital gains. If you're doing the BRRRR strategy, if you have notes, that's interest income. Dividend income, if you have dividend stocks, investing in the stock market, maybe you're a day trader or a futures trader or an options trader. Options, you get charged 40% for a year or less or 60% for a year or more. Save those taxes with the beneficial Spendthrift Trust. Rental income, maybe you have short-term rentals like Airbnb, traveling nurses, students, or you have long-term rentals. Maybe you have 10 doors, 20 doors, multifamily. Yes, you can take depreciation. You still can do this in the trust, but you're also going to save if anybody tries to sue you. What if one of your renters' dogs gets out and bites the mailman? What if you have an apartment building and someone falls down the steps? They would try to sue you, the individual. You're worth nothing. They can't go after anything that's in the trust. Then royalties. Royalties could be an actor, an actress, an author, a songwriter, a playwright. It could be somebody in the NFT world, NFT real estate, NFT crypto, NFT artwork. It could be mineral rights. One of my clients has oil wells. He inherited his granddad's horse farm. He's got 6 oil wells on that property. Me selling this trust is a royalty. You're going to save that money year after year after year. Beautiful thing. It goes from generation to generation. Now, one of the things when you go out to my website, www.learnwithsallymarie. Whoops, that's my other website. I'm getting confused. I just did another podcast. My website, thetrustisyou.com. You're going to get the slide deck that goes over everything. Now, I want to talk about 2 other taxes. One of the 2 other trusts. One trust is for people who are over 65. Every October, shows the last person I brought on live was naked. I'll never do it again. So people who are 65 or older, there's a thing called IRMA, It's called, I'm going to move my calendar thing. It's adjustable amount for, retirement spendthrift trust. This makes it completely private. Every October, the IRS goes back to 2 years back, so it's going to be 2021, and anyone who's on Social Security, they're going to look at 1040 tax returns to see if you made more than $91,000. This will affect your Part B of Medicare. Part B is your doctors and your tests. Right now, people pay about $166 a month for their Part B. If you made more than $91,000, you'll pay more to the federal government. And if you made more than $150,000, you're going to start paying the federal government for Part B. So what happens with the special trust for people over 65? The IRMA looks at your Social Security, looks at your pension, looks at any wages you're making, your 401k distributions, your IRA distributions, maybe capital gains, interest income, dividend income, rental income, and royalties. They're going to be looking at that. When you have a spendthrift trust, business trust, the 65 or older trust, or the regular trust, you're going to file a 1041 tax return. So it doesn't matter. They won't see what you've done when they look back at things for October 2021. That's that one. Now, with another trust I also want to talk about is a charitable trust. I am working with somebody, which is a really neat thing. I sell a charitable trust, and then what they're going to do is they are going to get you Google. It's going to be Google ad spends, a Google ad grant. It's going to be worth up to $120,000 a year. They're going to make sure it runs correctly for you, so you're getting $10,000 a month to advertise your nonprofit. So I just gave you the wrong website, www.learnwithsallymarie.com. I'm helping people get out of debt with one $10 gift and 3 recruits. That I'm doing this through that the charitable trust, getting free Google advertisements, get people to go to that website, and then they will come to my other websites, especially about the trust, because the Circle of Wealth, 5 simple steps. The 5th step is the trust. So I'm doing this legally. I'm getting free Google ad spend on there. This is a free grant that Google gives to anybody who does this correctly. And then you can get other grants too, because it's a charitable trust. All of this information is available for you at my website, www.thetrustisyou.com. Tonight, Monday, 8 p.m. East Coast time, I do a live Q&A. Where I will bring people on so that we can chit chat and answer questions. I don't do it here on TikTok because I don't want to see naked people. So if you can make it, it's www.thetrustisyou.com/Q&A. Come learn. You'll see the slide deck. I'll answer your questions. You can always set an appointment with me. Again, my goal is to help as many Americans learn about the Spendthrift Trust. This is exactly what real estate gurus have. This is what the Rockefellers have. This is what U.S. presidents have. If they can save federal taxes, why don't you? Just to give you a caveat, because most people don't know this, the federal tax system only became legal in 1913, just when we were going to get into World War I. It was supposed to be only a temporary tax code for, they said, 6 years. Well, it's more than 100 years old now, and most people don't know about the Spendthrift Trust. I have CPAs and financial advisors telling me what I'm teaching you is false. A good textbook that trust attorneys study in a law school, only 3% of all attorneys are trust attorneys. It's going to be called Scott and Asher on Trust 5th edition. I've given that link to several CPAs who have come back at me saying, oh my gosh, I need you to help my clients save money. So again, my name is Sally Gimmon. You can find me on all the social media sites. I'm right now I'm handcuffed for LinkedIn. I somehow they don't trust who I am. I have to prove who I am. But I'm going to go live tonight on Zoom. But make an appointment with me at www.thetrustisyou. If you'd like to find out more, I'll go ask you some blunt questions, get your information to give you the mathematical formula to see if we're going to save you money. Thank you for watching this presentation. My website, thetrustisyou.com, has free education. My podcast is Stop Paying Capital Gains Now with an exclamation mark. And I will go live Friday afternoon too. Take care. Have a beautiful week. Bye-bye.